This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, April 15th, 2015. Euro dollar. So no surprise to see a bit of a bounce in the euro, with the market well overextended on a medium-term basis on the weekly chart. However, the downtrend remains firmly intact at this point, and rally should continue to be very well capped in favor of a fresh downside extension below the recent 12-year low at 104.62 and towards parity further down. At this point, only a break back above 10.53, the high that we saw back on the 26th of March, would compromise the current downtrend. Sterling dollar. So cable has seen a bit of a correction in recent sessions since basing out at fresh multi-year lows at 45.65. The correction could open the door for additional upside in the sessions ahead, though the market would need to break back above 51.65, the high that we saw back on the 18th of March, to compromise the broader underlying downtrend. At this point, a lower top is sought out ahead of the next major downside towards a measured move objective at 141 further down. Dollar yen. So dollar yen remains locked within a consolidation, though the market is locked within a more well-defined and intense uptrend, with a recent 7-year high posted back in early March at 122.03. At this point, the consolidation should continue to be very well supported ahead of 118, with a break above 122.03 to open the next major upside extension towards the 125 to 130 area further up. Really, only back below that December low at 115.55 would compromise the bullish outlook. Euro Swiss. So a bit of a bounce in Euro Swiss on Tuesday, which could open the door for a resumption of recovery back towards the 108.15 highs. But at this point, while the market holds below 104 on a close basis, there is risk for deeper setbacks despite Tuesday's bullish close towards some previous resistance now turned support from back in January at 102.50. Ultimately, the market should remain supported above parity, while only a break back below would put immediate pressure back on the downside. At this point, a higher low is now sought out in favor of additional recovery back above 108.15 and towards the 110-112 area further up. Aussie dollar. So Aussie dollar has been consolidating just off its recent multi-year lows at 75.33, and deeper setbacks are favored below 75.33 towards the 70 psychological barrier further down. At this point, any rally should be very well capped ahead of 78, while only back above 79.38, the high that we saw back on the 24th of March, would compromise the bearish outlook. Dollar CAD. So dollar CAD continues to trade within a well-defined consolidation between 123.50 and 128.35. The consolidation is classified as a bullish consolidation given the broader uptrend that we've seen over the past several months, and an eventual break to the top side above 28.35 is seen towards the 2009 peak at 130.65 further up. But at this point, current setback should be very well supported ahead of 23.50, with only a break back below to delay but not negate the bullish outlook. Kiwi dollar. So Kiwi remains consolidating above the recent highs, the recent lows that we saw at 71.76, with the market locked within a more well-defined downtrend. Any rallies in this market should be very well capped ahead of the recent high that we saw at 77, while ultimately only back above 78.90 would compromise the bearish outlook for Kiwi. SPX 500. So the S&P 500 continues to consolidate just off its record highs from February at 2120, though the market is showing potential signs of topping. A break below and a close below 2040 will be required to confirm this topping structure and open the door for an acceleration of declines back towards and below 2000. But inability to take out 2040 will keep the immediate pressure on the top side, with a potential break of 2120 to open the door for fresh record highs up towards 2200. Gold. So while gold has seen a bit of a setback in recent sessions since being unable to break above that high that we saw, or close above that high that we saw back on the 2nd of March at 12.23, the structure still remains constructive while above 11.78, the low that we saw on the 31st of March. If the market can continue to hold above 11.78 on a close basis, then we should continue to see the possibility for the formation of a major base in favor of an eventual break above 12.23 and towards 1300 further up. The recovery that we saw several days back ahead of that 2014 base at 1131 lends itself to this bias of seeing a potential basing outlook in this market, and really at this point only a close below 1178 would delay this outlook. That's all for now.